Good evening and welcome to Capital Connection, the show where we join the dots to give you the big picture for business in Africa. I am Chris Bishop. On the agenda, deindustrialization is exacting a heavy toll across a range of African economies. The need to add value to products rather than exporting raw materials for relatively low returns is essential to grow economies and create employment. Our panel will take a view on the progress towards this necessary goal. And in Commodity Corner, the livestock sector comes under scrutiny. But first, South Africa's Minister of Finance post appears to be a poisoned chalice. After the advent of democracy in 1994, two finance ministers held the post over the course of the next 15 years and provided a degree of stability for the portfolio. Jacob Zuma's rise to the presidency in 2009 changed all of that. In the next 9 years, the portfolio changed hands 5 times, including Des Van Rooyen's 4-day stint as finance minister. Sir Ramaphosa reappointed Nhlanhla Nene as finance minister after assuming the presidency earlier this year. But now Nene's 7 months tenure is in jeopardy after the State Capture Commission of Inquiry heard of his previously undisclosed meetings with Ajay Gupta, alleged as a central figure in the state capture project. Now, joining me to talk about this is Nedbank chief economist Dennis Dykes. Now, is Nene's position untenable after this?
Well, I think there's enough for us to ask questions about, what were the meetings about. We also need to know a little bit more about what the whole PIC story was with in relation to his son. But I think it's very much too early to actually call for his resignation. I must admit, having listened to the hearings, I actually thought we had to give him a medal rather than actually call for his resignation. He literally saved the country by not signing the bottom line on the nuclear deal.
And also SAA and also a number of other projects as well.
And we would not even know about the Guptas had he not actually been fired.
And my point is, if you go back to the first time he was fired for pretty much nothing, as we've said, or standing his ground, there was turmoil in the markets. If he resigns or gets fired now, how much more turmoil could there be?
Well, I think it's slightly different there. Obviously, the motive was very, very negative. Obviously, we knew then that it was around the things like the nuclear deal and the SAA, and that, the finances were going to go to be absolutely shot. This time around, obviously, it would be around a governance issue, and it would be a loss, but obviously it would very much depend on who replaced him.
Now, that's a quick question. I mean, there's a lot of names being thrown around at the moment, from Zweli Mkhize to Barbara Creasy from Gauteng government. Well, what are the names you're hearing is replacement?
Well, obviously the deputy finance minister could step into the role. I think Barbara Creasy would be an excellent choice if it had to go this route.
What about the outside world, though? Aren't they going to say who's she?
Well, possibly, but I mean, she's got a very impressive CV, and she's actually stood against corruption in the past as well. So I think it would be a very easy sell.
Now, talking about cutting aside all of the corruption allegations, what about his actual performance? Because my view as a citizen is in 5 years' time, if the economy is in a lot better shape than it is now, I'm prepared to forget about a 3-minute meeting with Ajay Gupta 5 years before. What do you think about his performance?
Well, I think in his first stint he was very competent, and I think he's trying his best right now. A very difficult portfolio. Bear in mind he's been asked to produce a stimulus package without any extra cash. So in a way he might actually be hoping that he's fired because it's such a difficult task. but he has the confidence of the finance team, and I think the Department of Finance Treasury remains a very competent outfit.
And you think if there is a change at the top, do you think the economy will continue on its trajectory?
What, you mean downward trajectory?
I mean, well, everyone says it's going to get better, worse. And I mean, another point about Nene I can say is that a lot of the benefits of the work he's done in the last year, unpopular work of that, will only be seen many years hence.
Absolutely. I mean, unfortunately, we've got deep structural problems in the state-owned enterprises, for example. But I think also the way the economy is actually managed makes it very difficult to actually attract investment. Businesses, incoming businesses, foreign direct investment, people are actually asked to put cash on the table before they welcomed, which is a very unusual sort of strategy. So we've got to actually try and actually restructure the economy, and it's going to take quite a while to get that right.
And also, perhaps people forget that, like everybody else now in this globalized economy, we're competing with the rest of the world.
Absolutely, and we're competing with tax rates that are much, much lower than ourselves. We're competing in environments where, as I said, people actually lay out the red carpet, give you incentives to come and put money in the country, rather than saying, this is your BE requirement, we demand this, we demand that, we demand that, and by the way, you have to procure locally, etc., etc. I mean, it's just a very bizarre way about going about trying to attract a partner.
Do you think if Nene survives, which may be the case, do you think that there are much better times? I mean, I was reading a report the other day saying the South African economy could boom in 2019. It was an isolated report among many, but what do you think the chances are of that?
Look, I think it might be a little bit early. A lot depends on what happens in the elections and whether we get clear policy direction after that. But in my book, if everything goes really well, the early 2020s might be a good period, a prosperous period. But we actually have to have the right policy signals right up front post the election.
Thank you very much, Dennis Dykes, for your insights as always. Thank you very much. And now, in recent months, there's been an uptick in cattle prices. Our Capital Connection correspondent, Anazi Zorte, spoke to Absa Bank agricultural economist Karabo Takadi about the sector, what is causing the spike in prices, and other issues affecting the livestock business.
Karabo, thank you for joining us on today's episode of Capital Connection. It's nice having you. So we hear of an increased demand in beef locally. What are the contributing factors that are causing the surge in the price?
Okay, so the main reason is the drought that we experienced in 2016. And as a result, it had led to the herd rebuilding process that is currently underway. So what that means is there are less available supplies of like your cattle in the market to be sent to the slaughterhouses. The second reason is the low maize prices that was experienced in the previous season because of the high crop. Because of the high maize crop, and as a result there was an increase in the winter calf market. The third thing is there are talks in the market that your female cattle, your heifers, there is a higher percentage of that being sent into your slaughterhouses. And what that means is that the herd rebuilding process will be prolonged. And as a result, we will see your consumers continue to dig deep for that piece of steak.
Okay. So can you also please comment on how the imports in Namibia are affecting the demand for weaner cattle?
Okay, so the imports from Namibia mainly supplement the domestic market, especially in a year like last year where we didn't have enough supplies in the domestic market. So on average, about 225,000 head of cattle is imported from Namibia in the past 5 years. And last year we saw 313,000 head of cattle imported from Namibia into South Africa, and that was more because of the shortage in the domestic market. And for the Namibian producer, they were motivated more by the higher prices that has been paid by the South African market. So it's more to help the producer, to be able to supply enough beef in the market.
Right, but why is the weaner cattle so important in the South African context? I mean, a lot of people are purchasing these calves. Okay, so without a weaner cattle, you don't have, your piece of meat in the plate. So it's that input that will be put into the feedlot to be fed. Just to maybe give you an indication, they buy a weaner at about 250 kilogram live weight, and it will be sent into your feedlot to be fed for around 120 days to achieve
a weight of 480 kilogram live weight, and that will be sent into the slaughterhouses and distributed to the wholesaler and later to the retailer, later to the consumer. So the winner is that important aspect that we need to in order to get your outputs. And I would like to just say, in terms of pricing of the winners currently, we are at about 32 rands a kilo that the producer is getting, which is a fairly good price compared to prices in the previous previous years, but the price is relatively low compared to the 38 rands that we paid in around January.
Coming up after the break, my colleague Fifi Peters recently held a discussion about the imperative for African economies to make the beneficiation of the continent's raw materials the norm rather than the exception for African economies. Join me straight after the break. Welcome back. You're with Capital Connection. I'm Chris Bishop. Now, a few days ago, my colleague Fifi Peters hosted a discussion about the urgency for African economies to integrate greater beneficiation strategies into their economies to boost returns. The practice of exporting raw materials and adding no value does not stimulate economic growth or generate employment. Up next.
Good evening, I'm Fifi Peters. Joining me right now to discuss the beneficiation of Africa's raw materials to realize more value for products is in Johannesburg, Matt Purkis, a steering committee member of the South African Organic Sector Organization, and in Kigali, the executive secretary of Rwandan Mining Association, Frank Butera. Gentlemen, welcome. Matthew, let's begin with you because, you know, the issue of beneficiation quite dominant in our mining sector here. A lot of advocates advocating for it. It hasn't really materialized. In agro-processing, what does the situation look like there?
Well, from an agricultural perspective, I feel that we're not agro-processing as much as we could on the African continent. A lot of our raw material is ending up in the European countries, and the value add is being generated on that side. So as a contributor to the GDP, I think agro-processing and value adding on our shores would go a long way to not only creating jobs in the green economy, but as well as unlocking many employment opportunities for women and youth in agriculture.
For sure. I mean, Frank, Africa rich in raw materials and mineral resources. Some might argue that we are not rich in the competitive advantage that is actually needed to add value to our raw materials and resources. What's your view on the beneficiation debate?
It's true, our raw materials here in this part of the world, we are one of the regions that produce, especially when it comes to the minerals, we're producing more than 50% of the global production in the 3 T's. But when you look at its contribution to the nation's GDP is not as high as it's supposed to be, because of the way that the mines, these minerals are mined, the way these minerals are being exported. There is a need for beneficiation implement in this sector.
There is a need, but of course, do we have the skills, do we have the environment to do so in agro-processing here in South Africa? Matthew, your view?
Yes, I believe so. Look, there is training required on a grassroots level, but ultimately it's the investment in the agro-processing machinery that is required. When we look at the agri-parks that have been funded by government, a lot of the agri-parks have the bare infrastructure there. But ultimately what's required is further investment into specific value-added technologies, for example, soda dryers that would be able to do value add of, for example, mangoes, where we could do the soda drying of mangoes and then add the value add, and really give that process back to the farmers and the communities that can actually have community ownership over these processing plants.
I mean, but you're talking about a lot of money that's needed to get this off the ground, and this is money that a lot of African economies don't have. Therefore, I mean, Frank, bringing you in here, in the environment in which many balance sheets of African governments are quite constrained, how then do we go about building industries that are able to beneficiate here?
For example, the Rwandan situation. The government is putting up structures that would facilitate investment into value addition of the minerals that we are producing. So the need is to link the private sector with the government strategies, so that it can be a partnership between the private sector and the government, where the private sector is immensely involved in this development. But if you leave it to the government institutions only, I'm afraid it won't take any further step.
I mean, but you can imagine the backlash that we could potentially get here. I mean, these countries in Europe, elsewhere that have been doing this for so long, they've created industries out of adding value to products. Now we are essentially saying that, no, we want that to come home, rightly so, but you can imagine the backlash. I mean, how do, or rather, the question should be, is there a way in which those industries or the companies and manufacturers in Europe that have been adding value to our products for so long can still be part of the equation of adding value to African raw materials?
Yeah, look, I mean, private and public investment can happen hand in hand. I think that there's much opportunity for regional trade as well within the African continent. And I think when we focus on trading within Africa, we have much potential to not only pull in the European advantage and the competitive edge and the knowledge that they have accumulated over the many decades, but when we understand that there is a shift in a global economy at play, and Africa really being one of the continents with the most natural resources and the ability to contribute onto a global arena and a global economy, and when we look at doing the value add locally and trading within Africa, we can be very strong role players in the global economy when we try and create circular economies that benefit communities as well as right down to the ground, grassroots level.
Sure. Frank, what do you think so far has been the biggest stumbling block in many African countries adding value to their own products? Because I feel like we've been having this conversation about beneficiating for quite a long time, yet we haven't done enough to move the needle.
Yes, I think the major challenges relies entirely on the infrastructures. Electricity is very expensive in these countries, and the supply of it is also a hindrance. Coupled with access to finance, most of the mining sectors in these countries are not financed by financial institutions in these countries. Normally, because maybe lack of the knowledge of the financial institutions of the sector or what other means, but people, especially in this part of the world, rely on their foreign buyers that pre-finances the sector, and this affects their decisions to invest, especially when it comes to investing in the addition value structures or facilities that would require huge capital investment, and also the accessibility of the infrastructures, especially the electricity.
Mm-hmm. I mean, Matthew, in South Africa's case, some might argue that on top of high electricity costs, which we are now facing, news is that Eskom got another tariff hike. We've also got high costs of labor that are described as quite uncompetitive when you compare it to the rest of the world. And also, we've got an issue whereby you can't let go of labor as easily as you can in other parts of the world. But with all that in mind, for you, I mean, what's the biggest thing that has held us back from beneficiating more in agriculture?
Well, in a South African context, I would say our alignment to industrial agribusiness from a policy level is holding back a lot of potential grassroots development. There's many layers to that question, but I would say programs that really are focused on unlocking circular economies. When we look to the green economy and that narrative, finding the nexus between agriculture, energy, water and waste from a green economy level. And then when we look at how the global economy is kind of structured, we are leaning towards a more extractive economy, where I believe when we look towards beneficiating, it's more aligned to a regenerative economy and ecological best practice as well as social equity, which are very important aspects that are often undermined when we talk to large-scale economic activity.
I mean, technology right now presents an opportunity for everyone in the world to leapfrog any processes that perhaps they might have been left behind in. And Frank, I'd like your view on this. I mean, could advanced technologies, new technologies under the fourth industrial revolution perhaps present a opportunity for African economies to beneficiate more, or do you see further risks still lying ahead?
Yeah, I think with the new emerging technologies, the technology so far is considering such aspects that are, in the past we didn't have, people didn't have access to in this, but with the introduction of these other new technologies, I think it would be advantageous to companies operating in these areas.
Absolutely. I mean, from an agricultural perspective, ICT solutions are an amazing opportunity for linking emerging producers to a market. There are many challenges in working when you're looking at a rural economy, and how do you link these scattered, often very scattered producers to a formal type of trade mechanism. So ICT for us is a big focus. Even when you look at technology such as blockchain, that would be able to give the traceability, transparency to the end consumer, that would also bring credibility to value chain trade. I think these types of innovations, when applied to programs that link producers directly on the ground, can be hugely beneficial. And I don't think in the sectors such as mining and agriculture, for example, we don't fully yet grasp how massive these technologies could impact.
I mean, just going back to the issue of beneficiation being something that we have been speaking about for a long time, do you think that currently, at this moment in time, particularly in South Africa, there is more political will to ensure that this happens than there was previously?
Absolutely. I think obviously the land reformation process that's happening in South Africa right now does need to happen, does need to go ahead. We just need to be very mindful around how we don't want to lose the overall productivity of the economy. So when we are talking land reformation and talking how we can really plug emerging farmers into a facilitated value chain, I think that's really where the core focus needs to be, and it needs to be a multi-stakeholder engagement process. There's many things that are associated with it. For example, I would like to bring to light the seed issue in South Africa and currently what might happen with our seed. We need to be very sure that these farmer-run seed systems are at the center of a decentralized farming system which holds the value of the people. Because when we start giving over our seed stock to international corporations that are not based in Africa, we run the risk of handing over our food system and actually running the risk of really negatively impacting the agricultural sector.
Frank, political will in Rwanda, I mean, you did touch on the fact that it's the private sector that was leading the charge there in terms of beneficiating more. Perhaps you can touch on this and the kind of environment that has been established for the private sector to want to invest in beneficiation.
Yes, it's true. The government is now coming up with a strategy that they want to drive the economy. They want the economy to be driven by the private sector operators. So they are coming up with different strategies and policies that would facilitate the private sector, that the private individuals that would like to invest in different sectors, especially in mining and agriculture, things like that, that would actually impact the economy and the wealth and the community development of our people.
Policies, Frank, are you talking here maybe tax benefits? You talking, just give us or shed some light into what kind of policies government is introducing here?
Yeah, there are some of the tax incentives that are given to investors, and also the policies, for instance, in the mining sector. Now the government is coming up with a new law that will facilitate investors to invest in a more professional way of mining, that will also include, that will very much be embarking on the beneficiation of the production of these minerals. And they have laid out a number of incentives to the we have a board called Rwanda Development Board that facilitates the investors in different areas. So it has quite a number of incentives that it offers to people who come to invest in Rwanda.
Well, gentlemen, we will have to leave it there. Thanks so much for your time as we discuss beneficiation and the opportunities that it can create on the continent by way of jobs, by way of infrastructure development, by way of industrialization even. Let's hope that there is more political will to ensure that it actually happens this time around, but that is where we'll have to leave it.
And that's all we've got time for today. Do join us again on Capital Connection on Monday and Wednesdays at 6:30 p.m. CAT. I'm Chris Bishop. Good night.